Hi everyone, welcome back to this week's edition of the NGX weekly heatmap review. This week had everything in it: a massive sell-off to open July, a one-day 3.6 trillion recovery that almost erased it, a global index provider pausing Nigeria's upgrade, and Dangote Cement announcing its biggest dividend in the company history. Before we get into what happened during the week, if you're watching us for the first time, hit the subscribe button. We drop this breakdown every week. This week started where last week ended, in correction territory. Monday opened with a 1.58% decline, shedding 2.36 trillion. We had a bounce back on Tuesday, and we believe this is due to institutional fund managers doing their half-year portfolio rebalancing, closing the book for June 30, 2026. We didn't read much into this. Then July arrived, where the real selling began. Wednesday lost 1.63%, wiping out 2.39 trillion naira from the stock markets. We had a further drop of 0.61% on Thursday. By Thursday's close, the market had fallen from the 232,049 points at the start of the week to 224,321 points. This is a loss of about 8,000 points in just 4 sessions. Then on Friday, we believe institutional bargain hunting came back in force and the index surged 2.19%, adding 3.16 trillion in a single session. The week closed with a week-on-week loss of 1.21% and a year-to-date return of 47.31%. The market cap sat at 147.1 trillion naira, and Nigeria is still the best performing stock in Africa, up 59.5% in dollar terms for the first half of the year. On Wednesday, the FTSE Russell, who is a global index provider, suspended its planned reclassification of Nigeria to the frontier market status. The reason they gave was that they need more time to assess how the T+1 settlement cycle is actually working in practice before they commit to including Nigeria to the frontier index. Why does this matter? Because the frontier market status would guarantee automatic buying from passive global funds that track that index. Foreign institutional money flowing into Nigeria equity as a structural requirement, not just a discretionary bet. This is the kind of demand that doesn't appear when local sentiment turns. Nigeria market operator pushed back strongly, saying the infrastructure is working and that this is just a technical delay. But the suspension had uncertainty at a moment when the market is already in correction mode. Until FTSE Russell confirms the reclassification, foreign investors with index mandates will stay on the sideline. Now let's move to other happenings in the week. Before we look at the top gainers in the week, if you're doing your analysis based on the closing price for last week, you would have seen that FTGINSURE gained 225%. But in real sense, it actually did not gain that much. It is some mathematical movement. So if you remember last week, we spoke about their share restructuring. So what actually happened is that as of last week, the share was at 0.9%, and adding 4 of it to make it 1 share. So adding 4 of them together should actually give you 3.96%, the adjusted price. So if they're using the adjusted price to correct or to calculate the movement in the week, we saw that they actually dropped 18.7%, which means they should actually be on our top losers list. But due to the way the NGX dynamic work, it didn't correctly calculate. So just to point that out for you. So to the actual gainers in the week, first, let's look at Airtel, up 21%. Airtel has been executing a $110 million share buyback since May, buying back and cancelling its own shares. As of late June, they have repurchased over 9.2 million shares, which is even over the 7.7 million we spoke about last week. Fewer shares in circulation means each remaining share represents a larger stake in the same underlying business. That structural EPS support is the real driver here, backed by a strong FY 2026 result. The revenue was up 29.5%, profit after tax was up 147.4%, and the EBITDA margin improved to 49.3%. So the second person here is Regency Alliance Insurance, who, as we said last week, had their right issue, and the period for the right issue was between 22nd of June to July 3, closing last week. We believe this price is just taking it back to the price it was when the right issue was announced, and it was around 97, and that was about the price it closed at last week. And this is quite a little higher than the 95 kobo right issue price. The third on the list is UPDC. We see this as a technical rebound after the 14.47% drop last week, and this was partly tied to their share reconstruction. The fourth on the list is DAARCOMM, which came up 7.84%. DAARCOMM Communication is one of the cheaper media names on the exchange. There was no specific announcement this week, but the stock has been recovering from a sustained depressed period, and the move appears to be technically driven by gain hunting rather than any fundamental catalyst. The fifth on the list is SUNUASSUR, and from the week we saw that there was an 11% growth in the last Q1 result they released, which took their insurance revenue to 6.36 billion. So, they also had a 9.34 billion right issue, which is now completed. The next aspect we'll be looking at are the losers for the week. We have International Energy Insurance. This is a continuation of the correction that started 2 weeks ago when the stock already gained 175% in short term. But there is also the fundamental layer here. International Energy Insurance full year 2025 results showed the insurance business revenue down by 27% year on year, and insurance service results down 56.5%. The stock was trading at a PE ratio that was significantly exceeding the industry average before this correction began. The market is repricing it back to where the fundamental actually justifies the price. We also have McNichols PLC, which is a reversal of the 26.49% gain that the stock posted last week. The same hand that pushed up appears to be taking profit this week. The fundamental story hasn't changed. What changes? Whoever accumulated last week is distributing this week. We also have University Press down 17.54%. University Press was a gainer for 2 consecutive weeks. Same dynamics as McNichols. Their communication move appeared to run its course, and the reversal is the mirror image. We also have Briscoe, which is a logistic and automotive name, down 13.98%. The stock has been volatile, and there is no specific corporate announcement to explain this week's move. We also have UPDCREIT. So this is UPDC Real Estate Investment Trust, which has faced a sustained selling pressure tied to the UPDC capital restructuring story that drove UPDC's own volatility. The REIT tracked the parent company's assets movement closely. Other developments in the market during the week are, like I said previously, we have the Dangote Cement raising its dividend by 50% to a record 35 naira per share. This is worth approximately $750 million in total payouts. This comes ahead of the planned Dangote refinery IPO expected in September 2026, which Aligo Dangote confirmed this week. The refinery listing is shaping up to be the biggest Nigeria equity event of the year 2026. We also have the PZ result for full year 2026, which was quite exceptional. The net profit grew 388% to 49.1 billion, turning from a prior year net liability position to a positive net asset base. The company's turnaround under the new management team is showing up meaningfully in their numbers. We also have Oando that dropped 7% midweek after the SEC delayed approval of its financial results. Any delay in audit filing on the NGX is treated by the market as a negative signal, and investors moved out while waiting for clarity. And we've seen that Oando has delayed their result a couple of times. Before we move to review the NGX, is to also look at MTN. We saw that during the week, Augusto and Co. Upgraded MTN Nigeria's risk rating, credit rating to AAA, confirming the strong long-term creditworthiness and assessment of the Nigerian market. This supports MTN position as one of the few NGX names that the institutional investors treat as genuinely risk anchor. At this point, we'll be reviewing the heatmap as we do every week, and we'll be starting with the financial services. Remember last week I said GTCO, Zenith Bank, and Briscoe recovered the loss for the previous week. I think we are back to the status of 2 weeks ago, with GT, Zenith, and Briscoe losing big in the week. And we have UBA as one of the very few gainers on the list, followed by Living Trust. Remember, they also lost last week, and you can see it's still a red zone. The deep red are those over 5%, while the lighter red are those between 1 and 5%. So you can see the deep reds are the top boys: GT, Zenith, Cussons. There are other companies other banks or financial services that didn't move. We have Stanbic, Echo Bank, Wema Bank, Sterling, that stayed stagnant during the week. And yes, so now let's move to the consumer goods services. Only the movers in the week. We can see that we have Capri. All is also a red zone. I would only be calling out the outliers on the list. We can see Dangote Sugar is an outlier, and FTN and Cocoa declining a little bit below others in the market. We also have those in the industrial goods with Austin Lats and Company, Cutis PLC as the only gainers in the week. Every other person were very deep red, which means losses in the week. We have the ICT sector. We've spoken about Airtel Africa. We have Chams Holding. We have CWG PLC, who are gainers. Others, we can see MTN declined 9.64% during the week, and others also declined during the week. The oil and gas sector saw a surge, with the exception of Airtel, that continues on the decline trend. We have Eternal, Japo Gold, and Oando. We spoke about them coming down during the week. They covered before the end of the week. The services sector seems to be a mixed. We have the red ones, the deep red, the light red. We have C&I leasing. C&I leasing has been falling since the beginning of the year, and I think this is just a little recovery. We have DAARCOMM also surging. Ikeja Hotels, news about acquisition from one of the players in the market, but we'll be talking about next week. We also have RT Briscoe, which is spoken about. Transnational Express, University Press losing big. We also have Secure Electronic Tech gaining in the week. We'll be moving to the construction and real estate. They don't usually have a lot of movers, but you can see UPDC improve, while UPDC REIT decline. So let's move to the healthcare sector, going back to so we can see not a lot of movers. Those that moved in the week also declined in the week. So it's been a red bit all across board. Lake recovering from the previous week losses of 1.2%, but we still can see livestock, Okomu, Briscoe staying stagnant, and Zichis losing 0.01%. For conglomerates, we have Custodian declining by almost 10%, Transcorp declining by almost 7%. Other companies under this category didn't move during the week. Utilities didn't move during the week. Natural gases didn't move during the week. Investments didn't move during the week. So that brings us to the end of this week's breakdown. Remember to subscribe on YouTube and follow up on all social media platforms so you can be notified whenever we post new videos. See you next week, and thank you for listening.